Hi, in this video we're going to discuss about getting mortgages, getting loans for borrowers who are self-employed. And just know this, it is always harder, always has been harder for a self-employed borrower to get a mortgage. We've always had the traditional way, that we do things with Fannie Mae and Freddie Mac on a conventional loan or on FHA and VA loans. We typically always need 2 years of personal and business tax returns for you. Okay, now if you have been self-employed for 5 years or more and can prove it, we may be able to do a loan with just 1 year of tax returns on a loan, a conventional loan sold to Fannie or Freddie. Okay, so that's the first loan choice, but here's the problem that I have when I'm talking with self-employed borrowers. I'll ask them, well, what was your income? And almost always they tell me their gross income or total revenue for their business. We don't care about your gross revenue or your gross income. We want to know what your net income is at the bottom. That's what we care about. That's the number we look at. So you have to be careful when you're self-employed. If you declare too many expenses, some legit, some probably not so much. If you do that, you may not pay much to Uncle Sam in taxes, but you may not be able to buy a home. And you just have to decide what's more important to you, buying a home or paying Uncle Sam as little amount of tax money as possible. Now, thankfully, in the last 3-4 years, a second type of loan has become available for self-employed borrowers. It's called a bank statement loan, in which you still have to have been self-employed a minimum of 2 to 3 years, but we get either 12 monthly bank statements for your business or 24. And we have to document every dang deposit into your business account by invoices, check copies, that kind of thing. And we add up all those deposits for the year or 2 years and divide it by 12 or 24, and that is, quote, your gross income. But then there's another thing. It's called expenses. And all of our bank statement loan providers, they're going to use an expense factor of at least 25%. Some use 50. So let's just say you had total deposits last year of $120,000 or $10,000 a month. For sure, we're going to count at least 25% of the $120,000, as expenses. So now your income drops from $10,000 a month gross to $7,500 a month net, or maybe as low as $5,000 a month, which might make it really difficult for you to buy the home that you want. Another thing with bank statement loans, you got to put at least 10% down, often 20%, and the rate's going to be usually at least 1% higher, and those loans have higher closing costs as well. Now, just recently here this year, we have a new lender, a bank, that will do what's called a profit and loss statement loan. And in this case, we have you together with your accountant, your CPA or tax preparer, prepare a profit and loss statement for us, showing your income, showing your expenses. You have to sign it, so does the CPA. And so if we can do that, that is a much easier loan for us to do, because we don't need all 12 months or more of bank statements and have to prove every deposit for you. So this loan type is now much, much easier for you, but also for us. Now with the profit and loss statement loan, the P&L loan, you do have to put 20% down at least. But the rate, thankfully, is about the same as it is on a bank statement loan, and so are the closing costs. So to me, this is a better option, a far easier option for many self-employed borrowers. So just know this, you do have three different options. And I, as a former accountant, I always love looking at people's tax returns. I like to look at them preferably before you file them to see if you're going to qualify to buy a home or not. But just know I'm here to help you, explain things to you. So if you would like more information, you can always just text me at 303-881-6374. That's 303-881-6374. Or post a comment down below. Please subscribe to my channel. and share this video with everyone else you know who's self-employed.